All right, joining us now for more on the gold rush is Nitesh Shah, Head of Commodities and Macroeconomic Research at WisdomTree. Hello, Nitesh. With all the global uncertainty brought on by these tariffs, one would expect gold to be in a straight-up trajectory, but there have been some ups and downs. What do you put that down to?
Yeah, in the initial days after Liberation Day, gold was under a little bit of selling pressure. That's because gold is like a liquid, cash-like instrument. And when there was pressure on equity markets, when there was margin calls on futures positions, people were liquidating their gold to treat it almost like a cash-like instrument to meet their margin calls. That gave the initial pressure downwards, but very quickly it's turned around and we're at all-time highs on gold right now of 3,230 plus, and it's rising rapidly.
I mean, it's astonishing. If you look back just a year ago, I think gold is $900 higher than it was last April, $1,400 higher than 5 years ago. So it just generally keeps on growing. Quite different from the slow growth, say, in silver, or actually the slide we've seen in platinum. Why does gold keep its glow?
I mean, gold is quite a unique asset class. It's really a defensive asset, but also it has some cyclical properties to it as well. So when you see an economy overheating and producing inflation, gold prices rise. So gold has this kind of almost bipolar behavior. It does well in extreme good economic conditions and extreme bad economic conditions. And not many other assets do that. And, you know, some of the other precious metals have been doing well. Silver, till the end of March, was actually outperforming gold year to date. But gold has taken the lead with this increased uncertainty around tariffs. And gold tends to have the edge when there's times of extreme uncertainty around the economy, around economic policies, around geopolitical policies. Gold tends to be favored.
Who's buying the gold right now? Which countries as well are buying the gold?
Yeah, so a broad range of investors are buying gold right now. You can see, OTC, over-the-counter volumes looking quite healthy. Exchange-traded product investors, ETF investors, are also buying gold. Almost after sitting on the sidelines for the best part of 2 years, between 2022 and 2024, in the middle of both of those years, ETF investors were pretty much sitting on the sidelines. They started to come back in around the middle of last year, but over the last month or so, they've been really accelerating and joining in the rally. In terms of other countries, China has been a very strong buyer of gold for a number of years. In contrast to, the picture I painted for the global ETF market, in between 2022 and 2024, Chinese ETF buyers were pretty strong through that period and are gaining that strength. And then we have all the central banks that are buying gold. And they tend to be more developing country central banks, led by Poland last year and China the year before, but the Chinese central bank, the PBOC, has been buying gold for 5 consecutive months and is gaining a lot of strength there. There is a lot of desire to diversify their currency reserves away from the dollar and other G7 currencies, and gold is by far the superior option there.
All right, thank you so much, Nitesh. That, of course, is Nitesh Shah, Head of Commodities and Macroeconomic Research at WisdomTree.